welcome to Crypto DeFined for June 30th, 2022. My name is Kathy Chu, and I'm your host for this weekly interview series where we look at the skeptics, the innovators, and the disruptors in the crypto world. Crypto DeFined is put out by TruthDAO, which is a global news organization within a DAO that focuses on unbiased, nonpartisan news. Here on Crypto DeFined, we welcome everyone, whether it's skeptics or innovators and disruptors, and we want you, the audience, to decide what you think. So as long as you know their viewpoint, we are happy to have them here to speak. Please visit truthdao.xyz and join our Telegram and Discord communities for more information. Today's guest is Cory Klippsten, who is the founder of crypto trading app Swan Bitcoin and an advisor to the Riot blockchain, a Bitcoin mining company. He's a former management consultant and an angel investor who has funded more than 50 early stage tech companies. In case you're not aware of Cory's viewpoint, Cory is a die-hard Bitcoin enthusiast and believer. He's not so much a fan of other coins, though. His tweet this week sums up his viewpoint. This is from Cory's Twitter. To us, Bitcoin isn't some joke. It isn't a get-rich-quick scheme. To many of us, it is the most important thing happening in the world. Thank you, Cory, for being here with us today. Your time.
Yeah, great to be here. Thanks for having me, Kathy. And I'm glad you've made room for a skeptical innovator in both categories. And the quote that you just attributed to me was actually from a long thread, and it was kind of a reprint of an article by Tomer Strolight, who's actually the editor-in-chief of a couple of Swan's publications. So yeah,
Fantastic.
Just want to make sure I give Tomer the credit there.
Thank you. Thank you for giving proper attribution. Very important in the journalism world. So Cory, there's a lot to talk about, but let's start about how you think about crypto. Talk about why you are pro-Bitcoin, and I don't know if I can use this word on the air, but as you call it, other bad coins, I'll say, against other bad coins. Tell us your view briefly, if you don't mind.
Yeah, sure. So just by way of a little bit of background, I think it's probably important for your audience to understand where I'm coming from. You know, I've been raising money for about 18 years. I've worked for big companies like Morgan Stanley and Microsoft, McKinsey, Google, got a finance MBA from University of Chicago about 20 years ago. And I've been investing since I was at Google and ever since leaving Google in early stage startups, as you noted. Pretty successfully. I just had a 16th exit this week, so that's pretty cool. And then I got, really interested in Bitcoin, and frankly, crypto is really what dragged me in back in 2017, the last bull market, because I was in Silicon Valley circles and I kind of bought it hook, line, and sinker from the VCs that were kind of promoting their coins, and listening to the folks that had been, strong signal for me in traditional markets, looking at SaaS companies and, online media, ad tech, market networks, things like that. This would be, Union Square Ventures and Andreessen Horowitz that I would kind of trust for delivering signal. And unfortunately, they had spotted this sort of game afoot in the crypto space, where as long as these things are unregulated, you can say whatever you want about them. You can say that some blockchain or some crypto is going to save the world or have some kind of use case. And all you need is to be able to get that quick time to liquidity, which is kind of the magic formula for crypto VC, to pump these things up with the marketing. Again, that's completely unregulated. And you only need one pump to make a lot of money, right? And you don't ever need it to go up again. You're already sort of rich off of that investment. So there never needs to be any product market fit. There never needs to be any real world demand for any of this. You just create the coin out of thin air, grant yourself a bunch of it, pump it by whatever means necessary, and then sell enough of it at the top to make a bunch of money, and just try that over and over and over again. So kind of the key slides in any crypto VC deck, and really for any founder, is like, one, we can make our own weather, which means that there's no regulation around how you market these things. And two, short time to liquidity, which means that you can, pay an exchange listing fee. You fund a market maker with a bunch of, Bitcoin or Tether and some of your coins to kind of paint the tape and make it look like it's a hot thing, and do a bunch of wash trading on the exchanges. Again, wash trading is not illegal in crypto. It is illegal in traditional markets. So you can just sort of fake the whole thing and essentially complete your pump and dump. So that's essentially what I recognized as what the game afoot was with crypto. And thank goodness I figured it out by, early 2018, I would say, and became Bitcoin only by spring of 2018, and trying to figure out what I could do in the Bitcoin ecosystem to add value, because Bitcoin actually is real. And I was fooled at first, and it took me about a year to slog through and understand what was actually going on. But Bitcoin really is the best money that we've ever had as humans. It's super early in the adoption cycle of Bitcoin. Like, we're still on the flat part of the S curve. There's probably 7 to 10 million people globally that actually own $100 or more of Bitcoin. It's not very many people. And I think that'll be, 1 to 2 billion in another decade or so. So I think we just have a ton of work to do in Bitcoin, and we're really just kind of building the infrastructure and the education and helping people to understand it, and trying to make sure that they don't get distracted by these extractive, rent-seeking, no product market fit having crypto folks. And this is actually borne out in the data too. You've got 20,000 cryptos out there, and only 3 have ever had a new all-time high in Bitcoin terms three or more years after their first all-time high. So there was kind of like a massive ripple pump when they were really going hard after their marketing and doing all their pretend deals with payments companies and things back in 2017. So they bested their 2013 high. You had Dogecoin get pumped by Elon in 2021. And they had never really had a pump before. And then there was one more. Binance is kind of different because it didn't really have a full cycle. So it's debatable whether that would count with them sort of reaching a new all-time high in Bitcoin terms last year versus where they hit in early 2018. But that's it. Not one other coin has ever had a new all-time high in Bitcoin terms. So there's not even really an economic argument for buying and holding any of these. There certainly can be an argument for trading the heck out of them. Obviously, really good traders, top 1%, top 2% traders can trade anything that moves fast. And there's alpha generation there if you're really good at it. But for pretty much everybody else, you're just either exit liquidity, or you're the person sort of getting your face ripped off by the people that actually have algorithms and are much more sophisticated traders.
Okay, well, there's a lot I want to ask you about Swan Bitcoin and about the movement Bitcoin nowadays, but let's go to something that just happened this week. SEC Chair Gary Gensler said this week that Bitcoin was the only coin that he will call a commodity. Are you surprised by this, and what is your reaction?
Well, every single other coin, including Ethereum, basically passes all 4 prongs of the Howey test. So they are actually all securities according to the rules that we have on the books. I think the race for, Coinbase and Andreessen Horowitz and Paradigm and Solana and all these guys, and this is why they spend so much time and money in DC, is if they don't change the rules or block the SEC from actually applying the rules in some way, then all the crypto exchanges will be regulated as securities exchanges, and all of these coins will correctly be determined to be securities. Now, I don't have a view one way or another on whether that should be true. I just really think that we shouldn't be hypocrites. And so basically, like, if you're really against these cryptos being regulated, then you should also be banging the table for the SEC to ignore Ponzi schemes targeting your grandma. You should be totally in favor of penny stock operators being able to send direct mailings to nursing homes. Like, that's exactly, you should be basically totally in favor of anarcho-capitalist viewpoint. If you're not in favor of those things, and you actually like capital formation being enabled by strong markets with good laws and contracts, and recognize essentially what we humans globally have learned over the last 700 plus years since the 1300s, that there's so much information asymmetry in financial contracts that you need some kind of punishment for bad actors and some sort of regulatory framework, whether it arises from the market or from a legislature and enforcement by legal apparatus. You don't really have a leg to stand on saying, like, please regulate these things over here that underpin all of modern finance and society, but please don't regulate my bags over here in crypto.
Okay, so there's you feel that more regulation is warranted if you think that Ponzi schemes against your grandmother should be regulated, and other items should be regulated, then so should
obviously Celsius and Luna and Ethereum and all these things should be regulated.
Okay.
Yes.
So talking about what's going on in the crypto market nowadays, including Celsius. We have a bunch of high yield lenders like Celsius Network that promise these sky high returns to investors, Cory. You and I have talked about this before, and now they're in danger of collapsing, right? You have some firms being bailed out by Sam Bankman-Fried through his FTX exchange and through his trading firm, Alameda. Then you have a well-known crypto fund, the latest news, 3AC, that basically has been ordered into liquidation by British Virgin Island courts. Now, there's so much going on. It's hard to keep up. You had talked extensively on podcasts, sometimes on Twitter about Celsius in particular and why it would run into troubles. So tell me about why, even before Celsius ran into troubles, why you predicted that they would run into troubles.
Yeah, so I mean, this kind of goes back to the formation and just when they were marketing their ICO back in 2017, 2018 under false pretenses. I think, it kind of starts at the top with Mashinsky and, his four big claims, all with a quick Google search, all being false, right? He never raised $1 billion for startups. He was not the inventor of VoIP. He never had $3 billion in startup exits, and he was not involved in the most successful IPO of 2004. He wasn't part of that team. So those are kind of the things that he used to market his own background, and none of them checked out with sort of minimal research. So that was always kind of curious to me. I didn't really pay attention to them much at all, again, until, I was probably the loudest, somewhere on the efficient frontier of loudest and well-known critic of Luna and forecasting as early as March 24th publicly that it was going to go to zero, and banging the drum for that all the way up to the collapse on May 9th. And then the next day or even later that day, it came out, I think was actually put out by Celsius, that they had escaped with over $500 million worth of their users' funds from Anchor, which was part of the Luna Ponzi scheme. And that just horrified me as someone who knows that there are a lot of Bitcoiners, and people who like Bitcoin that had accidentally been suckered in by their false marketing and actually had coins on Celsius. So I started to look into that. And then you realized, that Stakehound thing I remember from summer of 2021 where they lost like $120 million. That was actually Celsius funds. That Badger DAO hack where they lost, $100 and something million worth of funds. That was 50 of that was Celsius. Oh, right. They got kicked off of Prime Trust. Oh, right. They had to change jurisdictions because they got kicked out of this or that. Their CFO got arrested last fall, I think in October, November, and pulled out of the company and put straight in jail. And their chief revenue officer is part of the same sort of criminal syndicate back in Tel Aviv. And Mashinsky had a bunch of cross ownership with different projects and some rug pull ICOs back in 2018, where he dumped all his coins on the first day they hit the exchange for millions of dollars. These things just kept on coming out. And then there were, some on-chain analysis showing that he dumped tens of millions of dollars worth of Celsius tokens while claiming, he was holding and telling all of the Celsians to hold their coins. So just an awful operation 6 ways from Sunday. But the key to it all was really just understanding the kind of risks that they were taking, that they weren't generating, yield for their customers by lending these out to credible counterparties. They were taking directional risks and essentially operating as an unregulated, prop trading desk or a hedge fund. And, my beef with all of the CeFi lenders, whether it's BlockFi, Abra, Nexo, whoever else is out there, and Celsius, crypto.com, like all these guys for the last couple of years, is that, these are not high yield savings accounts. You are signing up as an unsecured depositor to an entity that's going to go and trade your coins and give you some back. And so the right way to be compensated when you fund a trading desk or a hedge fund is either as an LP, where you're supposed to get 80% of the profits, or if you're lending them money, then you're going to be getting sort of mezzanine rates like 12 to 18%, 1 to 1.5% per month is pretty common when you lend to funds like that. So, dramatically undercompensated for the risks that they were taking with your money across the board. So the whole business model, I think, is just going to zero.
Okay. And just a reminder to the audience, Cory had mentioned a bunch of things and a bunch of allegations and events that happened with Alex Mashinsky, which is the founder. Some of them are on-chain, on blockchain analysis. Some of them are alleged, some of them are not totally proven. So take all this and do your own research about Celsius. Don't take it from Cory only or anyone else.
You should Google, and I appreciate the caveats, but remember, I was a former journalist, and I very clearly delineate the line between what is fact and what is conjecture. And I'll tell you for sure if I'll caveat the heck out of something if I'm not sure about it or if it's attributed to somebody else. But I've actually done the research myself, and he didn't invent VoIP. He didn't raise $1 billion. He didn't have $3 billion of exits, and he was not part of the most successful IPO of 2004. Those are facts.
As Cory mentioned, he was a former NBC local television reporter. So thank you for that, Cory. So Cory, you also warned, as you mentioned just a few minutes ago, about the dangers of the Terra USD stablecoin. And you warned about it, you mentioned in March. So tell me why you thought this could happen and whether you think other algorithmic stablecoins are also in danger.
Yeah, so the reason it came across my radar in the first place is because they kind of started sidling up to Bitcoin and doing the Bitcoin affinity marketing thing. So they claimed they were going to buy a bunch of Bitcoin for some reserve. And, he worked his way onto some Bitcoin podcasts, and some Bitcoiners started looking at it and cheering it on. And I was like, this guy is one of the shadiest people I've ever seen talk. I'm going to research this when I get time. A couple of days later, I had, an hour in the evening on a Friday to actually watch some YouTube interviews of, crypto fund managers that, actually knew it was a Ponzi scheme and explained why. Read a couple of blogs, just kind of getting up to speed and kind of understanding. And then I actually had the realization for myself exactly what was going on. And basically they knew that the Luna price would pump, they being the early investors or the people that would get discounted coins, from Do Kwon, and obviously their giant stash at Terraform Labs, sitting on a ton of these tokens that they printed out of thin air. They knew that it would appear to the market, to the dumb funds and the retail investors, that there was a vibrant ecosystem at Luna if the market cap of UST was going up. So if more people were actually trusting UST as a stable coin, then it would actually make the price of Luna go up, or at least let them dump their Luna at high prices or relatively stable prices as the market cap of UST went up. And that's exactly what happened. And so the mechanism that they came up with to increase the market cap of UST and fake the idea of a vibrant Luna ecosystem, which wasn't true, was to create the Anchor protocol, which is something that Do allegedly coded himself. And unfortunately, one of my classmates from University of Chicago ran that and was actually the GM of Terraform Labs.
I'm sorry, Cory, ran what? Ran the basically that protocol?
Anchor. Yeah, he was the GM of Terraform Labs. He's recently replaced his LinkedIn and said that he was a consultant or a part-time person, but up until the collapse, he was the GM of Terraform Labs. So a little bit of false internet history out there already. I won't name him because I actually enjoyed hanging out with him 20 years ago. But anyway, so Anchor was just a mechanism by which they could bribe people to increase the market cap of UST while out the other side dumping Luna. So in particular, Jump and Terraform Labs were topping up this Anchor reserve and spent about $1.5 billion just in free handouts for people parking UST on Anchor for a 20% interest, knowing that actually cost them way less than the amount of Luna that they were able to sell out the back door. Right. So it was actually profitable for them to give away that money up here. They claimed that it was for marketing, that they were trying to create this sort of borrowing and lending market around Anchor. But that was, obviously a terrible use of marketing funds. You could have bought the naming rights for the Lakers Stadium, the Miami Heat Arena, and probably bought all of the inventory on the Super Bowl if you really wanted to spend something on marketing. That's not what they were doing. They were literally bribing people so they could dump on them.
So, Cory, some of these firms that are collapsing or in danger of collapse have these high interest rates that you've talked about. And I guess you've predicted correctly twice now with Luna, Terra, and with Celsius. So I think what everyone's wondering from you is which companies now are you watching? Which companies are you concerned about that are in danger of insolvency? And, for all those investors out there who have their money in these firms, they're thinking, what should I be doing? Some of them are still very loyal to these firms, but, they want to know who
Mhm.
is next and who's in danger.
Yeah, listen, don't give up your coins. So if you're capable of jumping through the fairly easy hoops of learning self-custody or signing up with a multi-sig provider, that's really what you should do. We encourage self-custody at Swan. We try to get all our customers, our KPI, key performance indicator, is 0 Bitcoin under custody. That's what we try to achieve. We've been able to get people to take self-custody of about 70% of historical volume on the platform, which I'm really proud of. And then we work with the remaining 30%. One, we have segregation. We can't control those coins. We can't access them. We actually built on top of another custodian, Prime Trust. So all of our users actually have like an individually owned trust account, and Swan cannot access their coins, nor can a hacker that hacks Swan get at your coins. So just like being really tight on security. My personal opinion is that like your coins are safe at the biggest, best exchanges. So I don't think you're like, you shouldn't really worry other than having your account hacked or something like that. But I don't think Coinbase is going to lose your Bitcoin, and I don't think Kraken is going to lose your Bitcoin. Nevertheless, the main value prop for Bitcoin in general, as you sort of start to understand it, is actually holding significant value outside of the system and knowing that they can't lock it down, that no sort of capricious, judgment or executive order in the US, and like obviously way more likely to happen in other countries around the world, could just block your access to your coins on any centralized third party. So I think it's really important to learn self-custody and understand how to do it. And that's part of kind of being a Bitcoiner. And, my company, Swan.com, is certainly here to help. It's something that we provide is tons of education, guidance, one-on-one consulting, all of that, just to kind of help people actually take advantage of this new and better monetary technology.
Okay, and I want to ask you about Swan Bitcoin's business in a second, but any companies that you're watching that you worry that are in danger of collapsing?
Yeah, so I'm not crypto Ponzi PI. I don't sit around. I run a business that's like growing really fast and
Right,
has 60
right.
people, and my meetings are back to back all day every day. So I don't really think about it that way. Again, the only reason that Luna crossed my radar was because it sidled up to Bitcoin, and it was really annoying to see a bunch of people falling for a scheme like that. And then Celsius only crossed my radar because they were directly involved in the Luna Ponzi, and so it just made me take a closer look at that. I didn't predict Three Arrows Capital ending up with a massive hole in their balance sheet and wrecking everybody else. I didn't predict BlockFi going to zero. I actually thought they were probably had better risk management than they actually turned out to have. And I did predict that they would survive, and I think Voyager will survive. Obviously, they had a massive hole in their balance sheet as well. I think they had parked almost all of their free cash with Three Arrows Capital. So, I think these are all just dramatically overvalued businesses because they really don't have, there is no yield in the actual definition of yield. And what yield actually means is like an asset that actually, produces a flow, of a return. Uh, these yields in crypto and DeFi are not yield as defined in any sort of school of finance. It's actually just arbitrage, which is zero sum or negative sum, and essentially just governance tokens or whatever kind of printed out of thin air. It's just new money coming in and pumping up asset prices. So it's all kind of speculation on a speculation. The Wall Street Journal had a really good piece on this that kind of laid it out bare, which I think I tweeted out most of. So if you go to Twitter and go to Cory Klippsten, you can kind of read almost the full text of it. I said highlights, but I put out most of it. And then if you want to see like a much more detailed explanation of exactly why there's actually no real world value to all of crypto and DeFi, there's a great piece written last fall by Alan Farrington called Only the Strong Survive. So you can just look up ALLEN, Only the Strong Survive. And it's a fantastic, weekend read. Take you a couple hours to get through it. But I think it very clearly explains why this entire thing is, just various, variations on the same thing, just pump and dump dynamics and sort of self-referencing leverage and just sort of gambling and trading in a crypto casino. And the only thing that actually has that deserves a monetary premium is Bitcoin.
Okay, so let's talk about the turmoil caused by some of these collapses and just investors' worries and how that's affected Bitcoin and others. Well, the meltdown of Terra Luna and Celsius has, I think it's fair to say, has infected the crypto market. The market cap of the crypto market is now less than $1 trillion compared to $3 trillion as of November 2021. So 1/3 of its size as of November 2021. Now, most of the 13,000 coins in existence, if you look at them, and you referenced this earlier, I think also, Cory, most of the 13,000 coins in existence, a lot of them have dropped 90% or more from their high. Bitcoin, I believe, Cory, is about 70% off its high as of yesterday. I haven't taken a close look today. But so how do you look at this contagion that has infected the crypto market, including Bitcoin? Are people seeing this as buying opportunity, or do you foresee this as the entire market tanking further as more events come out? And are you worried about Bitcoin?
I mean, Bitcoin is what it is, and when you understand it, you generally see this as a buying opportunity whenever it's down. I'm a huge proponent and a personal user of automatic recurring purchases, so I just automatically buy Bitcoin every day and have for years. It's
And
really
this
what I
is what
suggest for.
Swan Bitcoin allows you to do, just to clarify, correct?
Yeah, it is one of the things, but I built it because that's what I personally wanted. That's how I wanted to build. That's how I wanted to buy Bitcoin. So it was the very first product that we launched was automatic recurring purchases, and I love it. You sleep well. You can focus on hanging with your family and going about your day and not trying to be a crypto trader. Just make sure that your number of Satoshis goes up over time. So huge proponent of that. Obviously, if you come into some liquidity or you feel like, you're underweight Bitcoin or something like that, and you're too heavy in other assets, then it makes sense to, buy a chunk at a time. And you may want to think about, doing a shorter dollar cost average program over 5 weeks or 5 months or something like that, or make a big one-time purchase. But in generally, bear markets are great times for accumulation. The vast majority of my stack came in the winter of 18-19, just buying in the 3s, 4s, 5s. And I think this is a similar kind of opportunity for people that may have gotten into Bitcoin in 2020 or 2021, have built conviction, have done the work, have, put in their 1,000 hours of listening to podcasts and reading Bitcoin books and articles and kind of understand what this monetary revolution is actually about. This is an amazing time. And I love that at Swan, we have those types of customers that we select for. Essentially, we don't have a sell button. It's a one-way on-ramp. Yes, you can sell, but you have to get in touch with us to do so, and very few people do. And so we had, our biggest week of the year right after the big drop down to 20K, and then the next week was great. This week has been good, so I love to see that our customers actually understand the value prop and sort of the long-term zoomed out view of what Bitcoin is, where it's come from, and where it's going. So, it's just super early days. I don't even see Bitcoin being a widely used medium of exchange until it's $1 million a coin. So whether that's 4 years away or 10 years away, until it's about double gold's market cap, I don't even think we'll see much spending of Bitcoin in the Western world. So, this is still very early in Bitcoin's development as a store of value, and we've got a long way to go yet.
So the volatility is actually good for business in a sense, because you're seeing record levels of activity. Are you seeing the activity coming mainly from retail, or are you seeing it coming from institutions, Cory?
Yeah, so our business is, I would say, sub-institution. So it would be like family office, high net worth, small and medium-sized corporates, and then lots of retail. So the way we think about it is we have Swan Private, which is swanprivate.com, and that's basically people that have bought $100,000 worth of Bitcoin or more in the last 12 months. We serve them with a managing director that came from a Wall Street bank or a Bridgewater or something like that, and also is in love with Bitcoin, and so you can talk to them. And then below that is just swan.com and Swan app, and those folks are just using customer service and things like that. So we're split on revenue about 50-50, and it's been pretty similar. I think maybe slightly more skewed to some whales buying the dip, so maybe like 55 or 60% of volume through Swan Private in June versus the usual kind of 50-50. But yeah, I mean, everybody that's into Bitcoin is excited when the price is low. I mean, I'm also very excited when the price is high because we get way more users, and the Google searches go up and you get tons of media attention and all of that. So I think it's really good for people who are already into Bitcoin when the price goes down, and then it's great for getting new people into Bitcoin when the price is going up.
Okay. Now, Cory, you're also an advisor to the Riot blockchain. Talk to me a little bit about what's going on with Bitcoin mining. I'm seeing that some miners are having to liquidate some of their Bitcoin holdings in order to satisfy operating costs and debt levels. So what is going on? What are you seeing with Riot and with Bitcoin mining in general?
Yeah, so these obviously all the miners, big and small, the ones that are sort of inefficient operations and maybe weren't quite as profitable or had contracted with higher cost power over the last year, especially starting last summer when the hash rate dropped. This is the computing power sort of contributing to the operation of the Bitcoin network. We call it hash power, dropped by 40 or 50% when China essentially shut down most of its mining capacity with a ban last June. And then that happened to coincide with a Bitcoin bull market because the price had peaked, I think, at 63K or so in late April or early May, and then we kind of had another run up in the fall, as you noted, to the peak in November of 2021. So there was just a lot of overinvestment and a lot of contracts signed with mining that could only be profitable in a favorable environment, like a favorable price environment. And so hash rate has actually continued to go up as it recovered from the China going offline, and then obviously the prices come down dramatically. And so what you're seeing is something like 1/6 or 1/7 the profitability per terahash is kind of how they think about it, as what you had a year ago. So yeah, it's definitely tough times for the miners that weren't ready to weather the storm. That's for sure.
Okay. Now, this week, the SEC rejected an application by Grayscale and Bitwise and others for a Bitcoin ETF. Bitcoin ETF, for those who don't know, would basically allow you to own, basically have exposure to Bitcoin without owning the actual Bitcoin. So, any thoughts on that, Cory?
Yeah, I mean, I think it's pretty irrelevant in the grand scheme for Bitcoin. I think it's relevant to a lot of people that have Bitcoin at Grayscale Bitcoin Trust in particular, and then obviously to the different fund operators that would like to start ETFs with just Bitcoin in it. So there's certainly a lot of people that would make a lot more money. I personally have some retirement funds in GBTC, and I think it's annoying that that it trades at such a discount to spot for Bitcoin. And so I'd love to see, selfishly either be able to get my Bitcoin out, that would be the ideal situation, or have it come back and trade at net asset value, if that took an ETF to do it. But that's purely selfishly. I think broadly, it just doesn't matter that much. I'd actually like to see more people go the route of actually owning real Bitcoin. It doesn't take that much to learn how to do it, and don't just have an IOU from a centralized third party that can get kind of clamped down by a government at any time.
Okay. What about the argument though that, and I should clarify, the SEC rejected a spot Bitcoin ETF because there are already futures Bitcoin ETFs out there. So what about the argument that a spot Bitcoin ETF will bring more people into the space and help them learn about Bitcoin and just spur more interest in this asset? Right? Do you think there's any truth
Yeah.
to that?
Yeah, I think it's on the margin probably helpful. I mean, I think it's been great for people to see GBTC as an option in most big brokerage accounts to be able to get some exposure to Bitcoin there. And I think it's probably a half step better than just buying, mining stocks or MicroStrategy or something like that. At least you're getting sort of much more correlated exposure to the Bitcoin price. Obviously, with the futures funds, like you can't buy and hold those for long because they just lose value. There's just slippage basically over time as the forward contracts roll. So yeah, I mean, I guess it would be better to have a spot ETF than to be relying on these futures funds, which are not good for buying and holding. So that seems obvious. And yeah, I mean, if there were a bunch of companies out there marketing Bitcoin and how awesome it is, and that got people down the rabbit hole, and then that essentially creates a top of funnel for marketers of real Bitcoin like Swan, and we can just kind of like pick those people off when they're ready to actually learn about Bitcoin and actually own the real thing instead of an IOU.
Okay, well, if that ever gets approved, you can let me know how that affects Swan Bitcoin in terms of interest. One last question for you, Cory. In the SEC, when it didn't approve this spot Bitcoin ETF, it's one of its main concerns was that there wasn't an adequate way to monitor whether there's market manipulation in the Bitcoin world, in the spot Bitcoin market right now. And I wanted to get your thoughts on that. And just for history, for some of our audience members, Bitwise Investments, which is one of the firms that basically applied for the Spotcoin Bitcoin ETF, in 2019, it found that up to 95% of Bitcoin trades were actually wash trades. So, that was its application 2019. It included that in its application. That statistic kind of roiled the Bitcoin world. And when the SEC disapproved the application by Bitwise and others for spot Bitcoin ETF, it said there wasn't adequate means to monitor market manipulation, including wash trades in the Bitcoin world. What do you think, Cory? Are you worried at all about wash trading and fake trading in the Bitcoin world?
I mean, there's astronomical volumes of wash trading in Bitcoin and crypto. That's a fact.
There still is right now.
Of course. Yeah. I mean, these are unregulated exchanges operating out of sort of lax jurisdictions generally, or sort of borderless organizations like Binance. And they're kind of just, doing whatever they want and kind of letting a lot of things happen on their platforms that, I could see why the SEC would be uncomfortable with that. That said, there's a lot of awful products that are ETFs that are really terrible for investors that are approved. And so there's a bit of that same thing. Like, I think the SEC is both right about Bitcoin trading and also being hypocritical because they have so many absolutely horrible products being marketed out there that they've let through. So a spot ETF is definitely not the worst product that's going to be out there in the world of ETFs. It'd probably be like significantly better than a lot of the ETFs out there. But it also has those problems that they've identified.
Okay. Any idea when you say astronomical amounts of wash trading? What are we talking about here?
I have no idea.
Okay.
I don't know. Yeah. Okay. Not my world. I don't trade.
Fair enough. Okay. Well, listen, we'll be posting a recap of our interview with Cory Klippsten on Monday. Thank you so much, Cory, for your time today. We greatly appreciate your insight. He can be found at swan.com. And as Cory mentioned, swan.com allows regular savings into Bitcoin. Thank you so much, Cory.
My pleasure. Thanks, Kathy.
Okay, so let's look after a turbulent week in the crypto markets. Here's a quick look at the week ahead in crypto. A prominent hedge fund in the crypto world, 3AC or Three Arrows Capital, has been ordered to liquidate by British Virgin Islands court. 3AC is reportedly considering its options, however, and more developments are likely to be coming in the next week. So that's one thing to watch. The order for 3AC to liquidate came after a creditor, Voyager Digital, who is itself struggling, issued a notice of default for the hedge fund. Also next week, expect more news about troubled high-yield lender Celsius Network. Celsius advertised yields as high as 18% to depositors and then invested in risky DeFi protocols. Celsius had exposure to the Luna Terra stablecoin that collapsed in May. Celsius is reportedly resisting its advisors' calls to file for bankruptcy, but we'll see how long it can stave off a filing. And next week, also expect to hear more about market manipulation in the Bitcoin world, as I just talked about with Cory Klippsten. The SEC this week denied the application by digital asset firms like Grayscale and Bitwise to approve a spot Bitcoin ETF, which would basically give investors a way to invest in a fund instead of owning Bitcoin themselves. The reason for the denial: it's still too hard to monitor how much market manipulation happens in the Bitcoin world. Right after the SEC denied this, Grayscale filed a lawsuit against the SEC. We'll be hearing more about this in upcoming days, including at TruthDAO.xyz. That's the latest for this edition of Crypto Defined for June 30th, 2022. Please visit TruthDAO.xyz to read our latest stories about how waning investor confidence is weeding out the weakest players in the crypto world. Join our Discord and Telegram communities for more updates and to contribute to the conversation. We'd love to hear from you. On our next edition of Crypto Defined on July 14th, we'll interview Nitin Kumar. Nitin is a serial entrepreneur who is making waves in the crypto world with his decentralized apps and is